Live from Pier 3 in San Francisco, welcome to Bloomberg West, where we cover the global technology and media companies that are reshaping our world. I'm Emily Chang. Our focus is on innovation, technology, and the future of business. Let's get straight to the rundown. The Facebook Roadshow heads home to Silicon Valley as hundreds of investors clamor to hear Mark Zuckerberg. In his message, Is It Getting Through? We will bring you the latest from Palo Alto. The magic is back at Disney, thanks to a smash hit, The Avengers, grossing more than $384 million so far. How will the entertainment giant build on this success? We hear from CEO Bob Iger and media head Anne Sweeney. And Apple takes a bite out of Hollywood. How the company has been able to place its products in hundreds of movies and TV shows without paying a dime. But first, to the lead. Facebook hit the road not far from home today, meeting with investors near headquarters in Palo Alto. CEO Mark Zuckerberg fielded questions about everything ranging from mobile strategy to his $1 billion purchase of Instagram. This time, he was wearing a T-shirt. Remember, he was criticized by an analyst right here on Bloomberg West for wearing a hoodie to the roadshow meeting in New York, sparking a powerful outcry from hoodie defenders. But fashion sense aside, Facebook is up against serious concerns about growth after revealing advertising isn't growing as fast as daily active users. Sources tell Bloomberg demand for shares from institutional investors is weaker than expected. And in a Bloomberg Global survey, 79% of investors, traders, and analysts polled think Facebook is overvalued at the high end of its pricing range, which could peg the company at $96 billion. Now, for more on how the show is going on the road, let's head down to Palo Alto, where our senior West Coast correspondent John Ehrlichman is standing by. John, what have you seen?
First of all, on Hoodiegate, Emily Chang, if you're wearing a hoodie in this weather, you're going to be sweating. I should be wearing a T-shirt today. But as far as Mark Zuckerberg, what he had to say today, along with Sheryl Sandberg, the #2, and the CFO, Dave Eversman, in a lot of ways, this was like the road shows that we saw earlier in the week in New York and in Boston. What is interesting, though, is that, of course, since those road shows, they updated the IPO documents to say, look, when it comes to our new users, a lot of them are gravitating to the phone, and that does create a murky outlook when it comes to our advertising. And it felt like this meeting might be all about the mobile business. And indeed, there were questions about that. In fact, the first investor question that was asked in this meeting was on the mobile issue. But a lot of these investors, even though it was a room full of venture capitalists as well, some high-profile folks, a lot of the equity investors were asking even simpler questions, like, your user base, do they like advertising? The kinds of things that we were talking about a couple of years ago when Facebook first started to put more advertising into the Facebook system. You're right. There was also the Instagram deal discussed today. Mark Zuckerberg a little bit on the defense, saying it wasn't something that happened over the weekend. We were in discussions for a couple of months on that. And the ultimate takeaway is, again, trying to pitch a new group of investors. And as we reported yesterday, the meeting's continuing with some one-on-ones today at Facebook headquarters.
So, John, have you spoken to anyone? What's been the reaction from potential investors?
Well, remember that these meetings are closed. If you're privileged enough to get an invitation, you're generally respectful of the process. You're not going to be, throwing things at the people who are presenting. And so the responses we got were fairly diplomatic. We did ask one investor, for example, what he thought about the mobile issue. Somebody who went into it with questions. Here's what he had to say.
Part of my view in getting comfortable is just understanding where mobile is going. The issue that they were asking was whether they're getting the kind of traction, getting the kind of revenues that were associated with it. And they're basically making the argument that they're working on it and they'll improve on it. So it's a process that will take place.
But, I did speak to one other investor who was in the crowd who didn't want to be on camera, spoke off the record, who actually thought that Mark Zuckerberg, who handled the bulk of the questions in the neighborhood of 70% of the 15 to 18 questions that were asked today, felt he was a little bit vague on the outlook for mobile, Emily.
So, John, what about demand now? We reported today that demand is weaker than expected. What exactly are you hearing?
Well, let's start with what we know analysts were told by Facebook. Sources told Bloomberg that analysts got a little bit of a heads up from the company, perhaps not to have those really, really upbeat projections, maybe to bring those down. And that certainly is a little bit concerning. As for what the true supply and demand picture is like, only Morgan Stanley really knows. Right, there are a lot of banks working on this deal, but Morgan Stanley is the one that's controlling the whole pie, and certainly they owe their client Facebook the responsibility of trying to get this deal done at, a valuation north of $100 billion if they can, but they're also trying to get this deal done at a price that's attractive to the kinds of investors that we're hanging out here today, who are looking for a good deal, who are considering investing in Facebook based on the pricing of the deal. So there's going to be a lot of gamesmanship over the days to come as we wait for the IPO. For more, though, on the Facebook story, I'm joined here by an analyst who covers the company, Susan Etlinger of Altimeter Group. So we talked, Susan, about the fact that mobile we thought was going to be a huge issue today, and to a certain extent it was the first question. What do you think Facebook is trying to convey here about mobile, especially after updating their IPO documents?
Well, I think the thing about mobile that everybody needs to understand is that people are moving from the desktop to the mobile device, and it's not just the smartphone, but it's the tablet device as well. And so as people move from that, they cannot monetize those users in the same way that they can monetize the users who come in over the desktop.
The advertising rates are low.
Exactly. And so what they've said in the statement was that they do not make meaningful revenue from the mobile platform yet. As a result, that is, that's a huge issue for them, because that they're going to have to address in fairly short order. And at this point, we don't know what the answer is going to be.
What about the more simple question of, do Facebook users like ads? I thought it was interesting that there were a lot of questions just trying to understand how the business works, almost like people hadn't been paying attention to what Facebook has been doing over the last couple of years. Do you think that the broader public understands that Facebook has gotten to a point where they're trying to get their users more familiar with advertising?
I think it's important for people to know this now, and I think that, in the past, it's really been the industry who's been focusing on Facebook. It's been the technologists, it's been the people in Silicon Valley and the East Coast, and everyone who's working in technology who's really been following what's happening with social technologies and specifically what's happening with Facebook. But now that they're going to the markets, they have a much broader constituency of investors that they need to cultivate and they need to educate. And so it's really important for people to understand what they're investing in, and that's why I think they're spending so much time talking about the advertising revenue.
Let's shift to Mark Zuckerberg, who was here today, and he was in New York on Monday, and he did some behind-the-scenes meetings with investors, too. We kind of got a sense that Mark Zuckerberg might not be present at all, and yet he has been showing up. Took some knocks for wearing the hoodie today, wearing a T-shirt. But what do you think about Mark Zuckerberg's role in this IPO process? How would you describe it?
He's the founder, he's the CEO, it's his company. He's been at the forefront since the beginning. He'll be at the forefront through this process, and I would have been shocked if he hadn't shown up for his own roadshow. And
what about the biggest questions in your mind for Facebook going forward over the next couple of weeks? Because there is still at least a week until the expected IPO date. If investors walk away today with a better understanding, do you think there's more that's going to be needed to be done by the company to get this deal done at a price that they're hoping to get it done at?
Well, I think there's so many variables. It's almost impossible to say, but the things that people will be thinking about will continue to be mobile, they'll continue to be advertising, they'll continue to be privacy, retaining talent, innovation, the ability of Facebook to grow past that 901 million to $1 billion and beyond. And how will Facebook continue to become a part of people's daily lives in such a way that it can continue to earn the kind of money that will give investors their returns?
All right, Susan, thanks for your perspective on this story. And
my pleasure.
That's Susan Etlinger of the Altimeter Group, and we're live at this investor meeting that took place earlier today. Emily, I'll send it back to you.
Thanks so much, John. We'll be back with you in Palo Alto later in the show. Coming up, we go live to Walt Disney Company headquarters in Burbank. Hear what CEO Bob Iger says the company did wrong when it comes to appealing to mobile consumers. Next. And for the latest tech headlines, be sure to check out our online tech channel at Bloomberg.com/technology. Welcome back. I'm Emily Chang. It's been a banner week for the world's largest entertainment company. Walt Disney reported a 21% increase in profit in its latest report. Its stock up more than 5% this week, and it can lay claim to the biggest box office weekend opening of all time. Today, Bloomberg has gotten unprecedented access to the entire Disney family, which is where we find our very own Carol Masser. Hey, Carol.
Hi, Emily. Yeah, it's been an interesting day and an interesting week. We've covered really those major businesses at Disney. Several do well. One of the major businesses that does well is media and cable networks. Now, Ann Sweeney is co-chair of Media Networks. Of course, she oversees the ABC network. And I asked her kind of what it would take to get to #1 or #2. She said, fairly simple.
Great programming, hit programming takes you back. But I also think that
But you feel like you've got good programming, don't you?
We have great solid programming, and I think one of the things that we did that was very smart was to be very bold in new technology and using new technology, both on the way we produce our shows, but also the first company to put our shows up in the iTunes Store, the first network to launch an app in the App Store for ABC.com. And to date, it is the #6 most downloaded free app of all time.
Right.
So I think the fact that we have gone so quickly and so fearlessly into this digital space has only helped overall ABC.
Now, having said that, Emily, I mean, she does think about ratings, and of course she would like to boost them, and, you know, certainly they've got a fair amount of programming, good programming, successful programming, in fact, that advertisers like.
All right. Carol, I know there are a lot of strong business units at Disney, ESPN, theme parks especially, but what about interactive? I know that's a unit that's really struggled recently.
It is. It's the smallest business at Walt Disney in terms of revenues, less than $1 billion it contributed in the most recent fiscal year. It has struggled, but I talked to Disney CEO Bob Iger about the interactive unit, and it's not something he's giving up on.
I think it's an important business for us to be in, but it's not a business that companies like us have had expertise in over the years. And we haven't either trained or hired people until fairly recently.
Is there a company to buy there that would make sense?
Oh, there have been potential acquisitions along the way, and we've made some. We bought Club Penguin, we bought Playdom. So we bought companies. Tapulous was another that put us in the mobile apps or mobile game space. We bought companies along the way that brought into this company great technology and great expertise in that field. But I'm not sure that we did enough of that early on. We feel good where we are now, both the talent that we have at the company, management and otherwise, but also the amount of capital that we're putting in the direction that we're going. We also, I think, we're less focused than we needed to be. We're more focused now.
Right.
The type of product that we're making. There's also been some big changes that have occurred in the business, shifts in consumer behavior.
Is that part of the problem, is that it moves kind of quickly?
Yes, well, it's part of the challenge.
Yeah.
Now, we probably should have been more up for that challenge earlier, and we weren't. The shift, for instance, from console consumption of games to social and mobile, for instance, which we probably didn't shift fast enough, and our investment was still a little bit more heavily weighted on the console side. We're still making console games for those platforms, but we're diversifying a fair amount.
And as we know from this week's earnings call, I mean, the company did post an increase in profit. Wall Street liked it. But on the analyst call, Bob Iger did say that in terms of the interactive unit, he does expect it to be profitable by 2013. So giving us a bit of a timeline there. Emily, back to you.
Okay, thanks for that. Carol Master, we'll get back to you a bit later in the program for a look inside Pixar Studios and the magic behind some of their biggest hits. Now, if you're an avid Gossip Girl fan, you may have noticed your favorite characters have started using iPhones this past season. In fact, Apple products seem to spring up on television shows and movies everywhere, and Apple's popularity in Hollywood is featured in this week's edition of Bloomberg Business Week. Our Andy Fixmer is one of the writers of this story, joins us now from LA. Andy, welcome to Bloomberg West. And Apple doesn't pay anything for these product placements. So how does this all happen?
Well, they have a lot of strong connections in Hollywood. A lot of the producers, writers, directors all use Apple computers in their real lives. So when they're writing characters in TV shows and films, they just naturally insert Apple products into those characters as well. So it's been kind of a harmonious connection for Apple.
Now, I recalled one of my favorite appearances of an Apple product on a show. Take a listen to this clip from Modern Family.
I love you.
I love you too, honey.
Oh, okay.
Laugh every time. Andy, so really all of this is happening organically? Apple isn't paying anything for this, isn't doing any marketing around this?
Well, no, they're not paying for any of this product placement that's going on, or what you just played is what's called product integration in the industry, and that's kind of the jackpot situation for a lot of these advertisers. But really, what happens is they provide these products free of charge to TV shows and film sets, and these guys use them in their productions. The Modern Family episode that you played on that one, that episode played before the iPad 2 even went on sale. So that was a huge bonanza for Apple, and gave them a lot of publicity right before one of their major product unveilings.
Is there any way to quantify this? I mean, how much is all this publicity worth?
Well, Apple was featured very, very prominently in the Mission Impossible Ghost Protocol movie that I think is still out, or it might be in Blu-ray now. But it was prominently displayed by characters, breaking into the Kremlin and basically averting nuclear Armageddon. And they all did that with their iPhones and their iPads. And we have estimates in the story that show that was probably about $25 million worth of free product placement that Apple got just in that one movie. So you think about what happened in Modern Family and what happens in Gossip Girl, and all of that just adds up, and it's a lot of money.
Now, Andy, on the other side of this, Apple's advertising campaigns actually haven't been as sort of snazzy and attention-getting as they had been in the past. I mean, this is a company known for that famous 1984 ad, the crazy ones, and today Apple's ads don't seem to be making as big of a splash. I did notice that they seem to be using more celebrities, Zooey Deschanel, Samuel Jackson in Siri ads. What can you tell us about Apple's advertising lately and why it's sort of taken a different turn?
Yeah, we have in the story, too, a couple brand experts opining that the ads haven't been as sharp for Apple recently. And some of that, I think, is due to maybe a change in focus at the company. You're seeing a different sort of placement of products. The newest ads, as you point out, kind of underline that Hollywood connection. You've got these celebrities using their devices to do everyday sort of things that you might do with it. So it just kind of underscores what these things are capable of doing. I think the ones you're mentioning really play the Siri kind of angle on the new iPhone 4S, yeah.
All right, Bloomberg's Andy Fixmer in LA, thanks so much. We'll be right back with more of Bloomberg West. Network security is something every company worries about, and one of the companies that helps keep large corporate IT systems up and running is F5 Networks. Our editor-at-large, Corey Johnson, had a chance to sit down with F5 CEO John McAdam to find out a bit more about how their system works.
We basically sit within data centers, so we sell our products to large Fortune 500 companies. Our products sit within the data center, typically in the same racks as servers. We see all the traffic coming in and out from the internet, and we optimize applications like Microsoft applications or Oracle applications, and we view ourselves as very much a strategic control point there.
But it's not actually part of the server. It's software that sits on top of the server and essentially directs traffic?
Correct. Yeah, and optimizes traffic and secures traffic and provisions resources within the data center. So very much a key infrastructure player.
And it's principally a telecom service, though, right? Or is it sold more to corporate?
It's across the board. Telco or service provider last quarter was 27% of our business, so it was the biggest vertical. Finance is typically the second vertical. But one of the things I like to say is if you're sending a text message, or you're booking an airline ticket, or you're doing social networking, you're probably going through our systems.
Now, the dynamics of spending right now in the telecom business are really weird. Last year you saw a big sort of first half push, which we've never really seen. There were hope that it would be followed by a second half push, and it wasn't. What are we seeing right now?
Well, it actually was for us. So we did have a pretty strong telco last quarter, for example. I think it was the highest percentage we've seen, 27% of our business.
But that was the opposite of the rest of the spending in the telecom industry. So why is that happening for you, and what do your results mean to the rest of the industry?
Our business is very project-driven, and it tends to be driven mainly by mobile data. So the requirements to manage mobile data, to cope with mobile data, to monetize it, make decisions and optimize it. And if you look at some of the big spendings, big projects we've seen, last quarter, for example, we had a fairly big spend that was related to an LTE rollout that's coming.
Right.
So it tends to be very much in sort of the key area and growth areas that the telcos are looking at.
That is a trend that we're hearing about. Big spending in LTE is maybe the largest sort of driver in telco spending right now.
Right. Yeah.
Now, virtual clustered multiprocessing. Why should we care about that?
Because it basically allows us to do, our customers more importantly, to basically look at sessions of data and in a very intelligent way at massive performance. So as these users that are using mobile devices, using iPads, any internet type traffic that's increasing dramatically, virtual clustered multiprocessing, very technology name, is the ability to do that at amazing speeds.
And it strikes me that a spend on your software saves companies from having to spend on servers and other, they might have to build out a lot more server capacity and router capacity for that matter, but instead by using your software they don't have to spend quite as much.
Exactly. We tend to get involved in a lot of big projects like data center consolidation is a very good example, where customers are going from, say, 100 data centers maybe down to 6. They're reducing the capital spend overall, but we are key to creating that architecture. So they spend money on us, but they reduce the capital spend overall in areas like the servers.
What is the biggest driver of your business, the thing that's causing, you mentioned LTE and consolidation, but I wonder if there are sort of things on the user end that are really driving it more than anything else?
The way we look at things now, we look at really 4 areas. The core business that we've got where we optimize applications across the internet traffic. And the fact that applications are being web-based, are being based for that. That's one.
But specifically about that internet traffic, like what is it in internet traffic that's driving it? Is it video online? Is it social networks exploding? Like,
It's all of the above, and also security. Another big driver for our business is the fact that you have these intelligent and large-scale, they call it denial-of-service type attacks that are, very coordinated against large websites. That's a big driver of business. Service providers, typically mobile data is a big driver. And then the overall architecture, the whole cloud concept, the ability to have it's called liquid data centers, dynamic data centers, where customers can move their resources around. We are very involved in that architecture build. So it's an architecture as well as industry drivers.
That was F5 Network CEO John McAdam. We head back to the Facebook Roadshow in Palo Alto next on Bloomberg West. You are watching Bloomberg West, where we focus on technology and the future of business. I'm Emily Chang with this hour's top headlines. A new twist in the Scott Thompson resume controversy. The Yahoo CEO reportedly told company executives that he never provided a resume or incorrect information to Yahoo. Instead, he said the information had been compiled over the years by a search firm. A Yahoo committee is currently investigating. The price tag is going to be pretty steep for LG's new 55-inch TVs, which use the new OLED technology. Sources tell Bloomberg they'll cost more than $9,000 each because production costs are high. The super thin TVs were a big hit at this year's Consumer Electronics Show. They are expected to be available later this year. And it's now possible to watch primetime television with no commercials. Dish Network just released a new feature on its DVR that automatically removes commercials from shows on the 4 major broadcast networks. To skip the ads, the shows have to be watched the day after they originally aired. The new feature, called Auto Hop, is an extension of Dish Network's Hopper Primetime Anytime service. Facebook made its pitch to potential investors at an IPO Roadshow meeting in Palo Alto today, but it wasn't just potential investors in the crowd. Plenty of high-profile venture capitalists were also in attendance. Our senior West Coast correspondent joins us again from outside the hotel where today's meeting took place. John, I imagine there might have been a little socializing going on there as well.
I'm telling you, Emily, they could have rolled out the red carpet. You know, what's interesting is, at the end of the day, this investor event is for portfolio managers, money managers, people who invest in stocks, to give them an idea of how the Facebook business works. We know all the venture capitalists have been talking about the Facebook story for however many years now, and yet it's so interesting about how many VCs showed up today from firms like Excel Partners, for example, Jim Breyer, who has obviously a very deep connection to the company through the board already, but plenty of other players here too. Ron Conway, the well-known angel investor. And there are two parts of the VC angle here. The first one is that if you're somebody who has owned Facebook, it's in your portfolio of companies, you want to show support. In fact, we were told that at the start of this meeting, Facebook gave a shout out to their VCs who were in the audience today. It's nice, you know, if the audience is going to be hostile, it's nice to have a little bit of support. Not that there were any hostile comments coming from the audience today. But the second part of it is, everybody wants to be a part of this Facebook story. I mean, let's face it, it's one of the biggest stories out of the Valley over the last decade. And so, if you can be seen by your peers right now, you're kind of interested in doing that.
John, to a certain extent, does this sort of red carpet effect that you're talking about actually make life difficult for Facebook?
I think the answer is absolutely yes, it does. I mean, here's a company right now is trying to do a little bit of balance. They're trying to temper expectations. I mean, think about it. It's not just that Facebook, while disclosing information when it has to, likes to be a little bit vague because they're on the IPO Roadshow. This is a business that is going through a huge change. I mean, think about it. This uncertainty about the mobile business, this is a real change that's affecting all the big companies in technology. And we've talked about so many countless companies in technology that have had to go through that big change, and how did they get through it? It's obviously one of the reasons why Mark Zuckerberg for years enjoyed the fact that Facebook was a private company. Now he's in a position where there's such a huge change happening that they have to deal with investors now on a quarterly basis. It's a huge reality check for Facebook. Emily?
Okay, thanks so much, John Ehrlichman, live in Palo Alto, where the roadshow continues. Thank you. Now, another interesting development surrounding Facebook today. Facebook co-founder Eduardo Saverin renounced his U.S. citizenship. His decision to give it up right before Facebook's public offering is no coincidence, though. The move will most likely reduce Saverin's tax bill on his Facebook stake big time. Remember, he's the guy who butted heads with Mark Zuckerberg, as portrayed in the movie The Social Network. He now lives in Singapore. For more on this latest development, let's bring in our Bloomberg contributing editor, Paul Kudrowski, longtime tech investor and entrepreneur, also the author of the Infectious Greed blog. With us today from San Diego. So, Paul, we've heard of people doing some very strange things to avoid taxes, but renouncing U.S. citizenship, that's pretty drastic.
Yeah, that's pretty drastic, all right. I mean, he's got something like, you know, if you go from the latest filing, something like 4% share on Facebook, so maybe $3.5 billion in Facebook stock outstanding. So, you know, depending on when he actually renounced citizenship, and there's some suggestion that it was as far back as September and only became public now, you know, that could have a material impact in terms of the value of the stock, because the way it works from an IRS standpoint is they look at the value of the stock at the time that you renounce citizenship, and so he doesn't get to entirely escape gains. There's sort of a clawback, an exit tax, if you will, and so what will happen is, what was the stock worth at the time that he renounced citizenship, and then, you know, that's obviously he hopes will be considerably less than what the stock will trade at, and that way he escapes some of the tax liability. But it's pretty remarkable. I mean, the notion that this would be one of the reasons why you might decide to renounce citizenship is because of Facebook gains. It just goes to show you that, you know, the sort of the externalities, the ancillary consequences of something this big are you know, largely unanticipated.
So obviously this particular case a big loss for the U.S. government, but in general, the United States and California are going to make out big on this IPO, right?
Oh, like bandits in every sense of the word. I was on a panel last week in L.A. with former California Governor Gray Davis, and we were talking about the famous sort of, I think it was a Wall Street Journal piece earlier in the year, where budget analysts in California were sort of snickering that there might see as much as $6 billion in gains from Facebook stock option exercise in 2013 alone. And there was some suggestion on the panel that the number might be considerably higher, not least because of what's happening with people like Savver, and that because of this changing tax policy in the United States, this thing called FACTA, where you actually are making it more difficult for people to move cash offshore and evade taxes, we could see even higher gains from this IPO than we might have seen historically from an IPO like Google, which actually had a material impact on California's finances. This will be disproportionately larger, in part because of these tax policy changes.
Now, sellers aside, let's talk about those buying. I want to get your thoughts on what Bloomberg found, that demand, at least from institutional investors, is weaker than expected. Also hearing some concerning information in Facebook's S1 that advertising isn't growing as quickly as daily active users. Concerns remain about the mobile strategy. What are your thoughts on all of this?
Sure. I mean, I loved that last night the Bloomberg story moved on the wire and it said, less institutional interest than expected, or some issues with institutional interest on the Facebook offering. And literally within an hour, maybe even half an hour, an unnamed wire beginning with R had a story coming out, was obviously spun in part by the bankers, saying that the issue was actually oversubscribed. So you had like dueling releases that essentially said exactly the opposite. So how do you square this kind of stuff? I think they're entirely squareable, and the way you square it is you say institutions are a little bit more skittish about this offering, but that doesn't imply that it can't be oversubscribed. And the way you make it oversubscribed when there's institutional skittishness on an IPO in any form is you push it through the retail channel, which helps explain in part why the front page of E-Trade this week was, don't pay a cent event. Look, we're going to have Facebook shares here. Be sure to get yours now. So there's going to be more stock pushed through the retail channel than otherwise anticipated, and that's really interesting. And in part, it's because of what we just described. This nervousness, not just about whether Mark's wearing a hoodie, a T-shirt, or flogging the IPO naked, but because of this structural issue in the business about this core deceleration and the transition to mobile, and what that means for the growth of a business that's going to be valued at something like 99 times earnings.
So, Paul, what do you think happens when Facebook ultimately goes public? What is the opening price? Will it pop on the first day? And what are the chances that we'll see that sort of same slide we've seen with Groupon and with Zynga, which is now trading far below its initial offering price?
I think we see something very similar. I think we see a small pop, largely skewed to the percentage of retail that ends up picking up the stock. If retail buying is higher, which the suggestion last night is it will be, we'll see a slight pop on the stock. So price at the high end, maybe pop 10 or 15%, and then a steady slide lower, because what everyone forgets is what secondary trading in the shares have done is created this huge overhang of stock. People are very happy to sell at 80 and 90 billion market capitalizations, or considerably under the proposed IPO price, because they just got into the stock 6 months ago at half these valuations, or 20% of these lower on these valuations. So they're happy to trade out now, and that constitutes a liquid overhang that'll put pressure on the stock for some time.
And Paul, quickly before you go, I got to ask you your thoughts on Hoodiegate. We had Michael Pachter of Wedbush here on the show, very upset about Mark Zuckerberg wearing a hoodie, or suggested that investors wouldn't like it. Today he wore a T-shirt. Does it matter?
I don't think it matters. I think what it speaks to is just his fundamental discomfort with being the CEO of a public company. I mean, this is more a reflection of him saying, I'm me and I'm going to do things my way, and I don't really care what the tribal rituals are in your tribe. You're the tribal rituals in my tribe. And I think that's totally fine. But as an investor, you just got to ask yourself, do I want someone who thinks that way and has that percentage of the company running a company of this size and at this price? That creates an awful lot more risks that have nothing to do with hoodies and everything to do with discomfort with being the CEO of a public company.
Well, surely this won't be the end of Hoodiegate. Bloomberg contributing editor Paul Kudrowski, thanks for joining us. You can find Paul on Twitter @PKudrowski. And coming up, they are responsible for films like Toy Story, Cars, and The Incredibles. Coming up, we go back inside Disney for a close look at Pixar Studios and the magic behind its blockbusters. Welcome back. I'm Emily Chang. Once upon a time, Mickey Mouse and Donald Duck were the faces of Walt Disney. Now it's characters like Buzz Lightyear, Nemo, Lightning McQueen. They are the stars of a Disney film studio that took animation to a whole new level. Our Carol Nasser has been going inside Disney all day long. We are back With her now at Walt Disney Company headquarters in Burbank with this story. Carol?
Hi, Emily. Well, this building behind me is where such animated classics such as Sleeping Beauty, Cinderella, boy, I can't talk, Cinderella, of course, Dumbo, and Pinocchio were made many years ago. Now, there's still some animation that goes on at this lot, but if you head about 400 miles north, there's another company that's doing an awful lot of animation for Disney. It's a little company known as Pixar. I think you know it. Now, it's a company that almost every 24-year-old wants to work at, and maybe even a couple of 40-year-olds. One visit there, and you'll understand why.
Welcome to Pixar, where employees ride around on scooters, passing Luxo Jr., the company's logo, and iconic characters from the company's 12 feature films. It's a place where creative juices are fueled by foosball and ping pong, a swimming pool and basketball court, all in the hopes of creating the next Toy Story.
I got a staff meeting, you guys. Come on, let's go.
Those staff meetings might happen here.
This is our main atrium. The idea was to have it very open and to encourage kind of spontaneous interactions, you know, where you run into somebody on the way to grab lunch and you're like, oh, hey, I've had this idea that I've been meaning to run past you.
There's a different culture here, you know, and everybody will protect that culture with their lives.
Especially Pixar's creative head, John Lasseter, who calls himself a grown-up kid who likes to give hugs to everyone.
Which Hawaiian shirt I'm going to wear today.
He's got a closet full of Hawaiian shirts and an office full of toys.
What makes Pixar Pixar?
It's a filmmaker-driven studio.
Right.
It's not an executive-driven studio.
Also a driver, an emphasis on storytelling and characters, like those in Pixar's next big bet, Brave, which features its first female lead character.
Her wiry red hair is part of her character and her fiery spirit, and so trying to create that hair was a new technology challenge for us.
When we start a project, every single Pixar film, there's something in the story that we don't know how to do.
I still don't understand.
And with Brave, there was a lot.
It took the studio more than 5 years to complete.
Art challenges technology, and technology inspires the art.
Pixar also gave Disney a great visionary, Steve Jobs.
He was our guardian as far as the business of Pixar, of had the vision of taking us down the line, and he nailed it.
Lasseter says Jobs was like a brother. As for his Pixar family of employees and characters, he's got a vision, and that is to keep Pixar
an awesome place. We're going to do everything we can to keep making absolutely amazing films and original stuff that blows people away, great sequels that are different, and we're just going to keep doing that.
Now, Carol, Disney seems to be making a lot of money franchising their films, but the merchandising opportunities aren't really there for Brave, at least as far as analysts have to say. Does that worry Disney at all?
No, you're right, Emily. Analysts are bringing up that concern. Bob Iger, the CEO of Walt Disney, he isn't worried. In fact, he sees merchandising opportunities for the Brave movie. And he also pointed out some other Pixar movies, whether it was Up, WALL-E, or Ratatouille, were great movies, didn't have a lot of merchandising, but they also did go on to win Oscars as the best animated feature. So they were good movies, and that's something that Bob Iger stressed. He wants to create a good movie, a good story, tell a good story, and that's good enough for him. So even though a lot of analysts talk about it's all about, you know, leveraging the brand, to Bob, it's about getting a good movie and getting a good story out there.
Right. Thanks so much. Bloomberg's Carol Masser, live from Disney headquarters in Burbank. Up next, it's the most popular video sharing app on Facebook and the Apple App Store. But will it be the next Instagram? We've got the CEO of SocialCam here next. This is Bloomberg West. I'm Emily Chang. Video sharing app SocialCam has become the top app on Facebook this week with 41.8 million monthly active users, according to app data. It's beat out popular apps like Cityville and even Yahoo. Video apps are battling it out to be the next Instagram, which was recently acquired by Facebook for a cool $1 billion. But what'll it take to keep that top spot? SocialCam CEO Michael Siebel is here to talk all about it. Welcome to the show. You guys have really taken off since we last spoke, especially since the Instagram acquisition. Everybody is talking about video being next. Let's start with where you guys are, how fast you're growing.
We've grown amazingly quickly. To give you a sense, about 30 days ago, we were only using 15 servers, and we're now using over 120 servers to keep our site up and running and to keep the app working well. We've acquired over 20, 25, 30 million users during that same period of time, and app usage has increased 10x during that period of time.
Now, are you focusing on user-generated content or video content in general?
So I think within the app, we're really trying to focus on getting people to watch the videos their friends create, and we're also trying to make it really easy to take videos. We think that there should be 100, 1,000 times more video creators in the world. Everyone's got a cell phone right now that can take video. So we really just want to make it so much easier for them to do that.
So there's been some pretty significant criticism leveled against you guys about taking stuff off of YouTube. Someone from the Next Web writing, it appears SocialCam is pulling in YouTube videos to its service, passing them off as content uploaded by its users. How do you respond to that?
It's just completely not true. Like, if you look at our website, what we try to do to give the web experience is people want to see the videos that their friends are watching. So we clearly let them see those videos, whether they're taken with SocialCam or whether they're YouTube. We show them the YouTube embed. It shows the YouTube ads. It gives YouTube plays. Basically, we just use the standard YouTube API. And our goal is on the website to make sure that whether they're looking at SocialCam videos or they're looking at YouTube videos, they're seeing the videos that their friends are watching.
Okay, so it's not necessarily videos their friends are shooting. In terms of generated, then,
yeah,
you are talking about watching and shooting.
Exactly. I think what we learned is that basically consumption is so much more powerful right now than creation, that we have to get people into the front door of our app by watching fun videos and watching the videos their friends are using, and then we can start selling them on creation.
Now, what about, I have to mention the V word, Vidi, in the media leaks, it's you guys being pitted against each other.
Yeah.
They have a different approach, just 15-second videos, all user-generated, and in that they're shot themselves. Justin Bieber's tweeting about it. Mark Zuckerberg posted a video.
Sure.
There. They just raised $30 million, which was announced today. How do you differentiate yourself?
So I think the big difference, I mean, first of all, you can see in the stats. We're the #1 on the app in the App Store right now, and I think Vidi's been on the decline for the past 2 weeks. I think that they're number 30 or even lower now. And there's really only one reason why. It's retention. We get so many users who tell us that they want to be able to take videos of any length. And when you go to Vidi, you can only take 15-second videos. So for us, it's really important to bring users back again and again and again. And when you give them all the tools we give them, plus the ability to take videos of unlimited length, it's so much easier to retain users.
What about the acquisition question quickly? I mean, is your goal to be acquired by Facebook? I mean, the Vidi CEOs out there saying, potentially YouTube, Facebook, Twitter, anything's possible.
All we want to do is get more users and retain more users. We think there's a huge trend around video creation, and we want to be the leader.
Okay. Michael Siebel of SocialCam. We'll keep our eye on you guys. Thanks so much for stopping by.
Thank you.
Now, we have a special edition of Bloomberg West coming up on Tuesday next week. We will be broadcasting live from the Intel Museum. We will have an exclusive look at how the chip giant puts Intel inside your gadgets. Among our guests, Intel CEO Paul Otellini, COO Brian Krzanich, and mobile head Mike Bell. That is Tuesday on a special edition of Bloomberg West. And coming up, stick around for our BWest Bite, one number that reveals a whole lot. And now it's time for the BWest Bite, where we focus on one number that tells a whole lot. Let's head back down to John at Facebook headquarters in Palo Alto. John, what do you got for us today?
All right, the bite is 3, as in big black SUVs that showed up here at the Crowne Plaza in Palo Alto today to deliver 3 executives: Mark Zuckerberg, Sheryl Sandberg, and Dave Ebersman. 3 cars for 3 people, really? But when they put that IPO prospectus together, they did say there was going to be a lot of security as part of this IPO process, including more security at Zuck's house and, of course, more details on the private jet he uses, along with some family and friends. Hey,
I could use my own SUV too, you know? I mean, my space.
There you go. And look, the reason I wanted to highlight that is because, of course, they updated that IPO prospectus this week. They said more users are coming to the phone. The advertising market there, it still isn't fully figured out. There were questions asked about that today, but the answers, in the view of some, were a little bit vague, and certainly that's the big question. If you do get answers that are incomplete, are you an investor in Facebook? Are you an investor for the long term? All the kinds of questions we'll be certainly exploring next week.
Well, they do have a few more days on the road next week, a few more days to convince investors. John, thanks so much. Thanks so much for joining us for this Friday edition of Bloomberg West. Have a wonderful weekend. We will be back on Monday.